Greetings everyone. Today we'll be looking at Clarks, which is a British company, and Khadim's, which is an Indian company, and we'll be doing their business environment analysis. So the tools we're using for the business environment analysis is, first of all, we've got SWOT analysis, right? Then we've got Porter's 5 forces model analysis. Then we've got Brio analysis, and we've also got pestle analysis. There were two investors, one experienced one and one who had just started on his path of investing. And they were contrasting and comparing the two different companies, Khadim and Clarks.
So I'm looking to start investing in investing. So I found two companies, two good companies, which are Khadim's and Clarks. Can you tell me how to invest?
Okay. So to invest, you can't just look at the graphs and determine which company is doing better. There are many strategies to know which company is actually doing better. So you can analyze their performance by looking at four types of analysis. You can do the SWOT analysis, the pestle analysis, the Brio analysis. You can also use the Porter's 5 force model. So using these analysis, you can see which company is doing better and which one is more suitable to invest in.
Doing SWOT analysis of Clark company. Strengths will be loyal customers of all ages, families and friends. Offer collect from stores and next day deliveries. Free standard deliveries and free returns. Offer a range in different sizes. Good customer services. Clark Plus Shoes offers extra comfort to cushions and support the foot's natural movements. If we talk about weaknesses, cost, budget, not seen as in fashion forward, international trading. Cost will be Clark shoes are seen as expensive for the high streets markets. This could this could be offered for students or customers who were trying to buy in a budget. If we talk about opportunities, rising of social markets, iPad in store as customers can order online if their sizes is unavailable, collaborations between companies and student discounts. And if we talk about threats, competition, competitor sellings, shoes at a cheaper price, stock loss, and rising cost of raw material, it might cost more to make the shoes.
So now I'll be doing the SWOT analysis of Khadim. The strength is that human resources are integral to the success of Khadim and it has a strong annual EPS growth. The weakness is that business models of Khadim India can be easily imitated by the competitors in the retail industry. Opportunity is that accelerated technological innovations and advances are improving industrial productivity, which allows the suppliers to manufacture a vast array of products and services. The threat is that Khadim has a shortage of skilled human resources. Given the high turnover of employees and increasing dependence on innovative solutions, the company name can face skilled human resources challenges in the near future.
Hi, so I'll do the pestle analysis of Clarks. We have 6 different factors, which is political, economic, social, technological, environmental, and legal. So first for the political one, so the most important points are bureaucracy and interference in construction and materials industry by the government. We also have the legal framework that is really required for contract enforcement, and intellectual property protection could prove to be a hazard for the company. Next we have economic factors, right? So level of household income and savings rate. Clarks, it needs to be careful about building marketing strategy that is dependent on purchase on credit customer behavior. There's also the financial market structure and availability of capital at reasonable rates, which would define how Clarks behaves in the market. We have then social factors, so attitude towards health and safety, right? The attitude towards health and safety is often reflected in the quality of the products and cost structures of the manufacturing process. Clarks has stringent norms for health and safety. So in emerging economies, it may be difficult for it to compete with different players. Next, we have technological factors, research and development investment levels. If there is a high level of investment in technology development sector, then there are high chances of building a self-sustaining ecosystem that drives innovation. It also needs to be prepared for 5G related infrastructure. Countries across the world are trying to prepare themselves to install 5G infrastructure, and Clarks should be prepared for that. Second last is environmental factors, right? Environmental standards and regulations, both at national and local levels. It often at the environmental policy at national level and local level can be different. This can help Clarks in numerous decisions such as plant location, product development, and pricing strategy. The last point is the legal factors. Countrywide regulations demand businesses to form legal contracts pertaining to employment that may prove to be a hazard or a boon for Clarks depending on the country. Clarks at Crossroads C practices employment laws and briefs its employees about the same during the requirement process. So that is about it for the pastoral analysis of Clarks.
Khadim's pestle analysis. Political factors. Other stakeholders such as non-government organization, protest pressure groups, activist movement play a critical role in policy making in India. Khadim should collaborate with these organizations so it can contribute better towards the community goals as well as corporate goals. Economic factors, downward pressure on consumer spending. Secondly, government intervention in service sectors and in particular with retail industry can impact Khadim's fortune. Social factors, gender roles. The gender roles are evolving in India. Khadim can test various concepts to cater and support these evolving gender roles in Indian society. Second, media outlets plays critical role in influencing the public opinion. Both traditional media as well as social media rapidly growing in India. Khadim can leverage the growing position of media to better market position its product. Technological factor first, empowerment of supply chain partners. Second, 5G and its potential. Third, latest technology based on innovations implemented by competitors of Khadim. Environmental factors, waste management, especially for units close to urban cities, has taken increasing importance for players such as Khadim. Legal factor, data protection law.
Now for the VRIO analysis of Clarks. So VRIO helps us analyze how valuable, rare, inimitable and organized a company's resources are. So for Clarks, the track record of project execution is valuable to them. It's also a rare thing. However, and none of the competitors have been able to imitate it. And yes, it's been very well organized, which provides them a strong competitive advantage. Their alignment of activities with their corporate strategy is also a valuable resource. However, it's not rare as many other companies have also done it. As for the imitability, each of the firm have their own strategies, so it's not copied by other competitors and it's organized. So this means there's still a lot of potential to be built on their alignment of activities. Coming to the third resource, which is the track record of the leadership team. It is a valuable resource. It's also rare, and it can't be easily imitated by competitors. It's also organized, which provides another strong competitive advantage to them. Now the fourth resource, which is their IPR copyright trademarks. Yes, they're very important, very valuable, which helps eliminate competition. They're also rare as other competitors cannot copy them. The risk of imitation is low, but given the margins in the industry, the disruption chances are high. And so far, it has not utilized the full extent of its IPR and other properties, which still provides a strong competitive advantage by which can be used better. For the final valuable resource, the customer community. It's valuable as customers are helping in co-creating the products and they're able to build a special relationship with their customers, which is not common. It's very difficult to imitate this kind of culture and community dedication, and going by the data, there's still a lot of upsides to this.
Now for the VRIO analysis, which stands for value, rare, imitable and organization. Value, premium yet affordable products in the metro city. Are rare, brands catering to different customer segments within the retail segment. I, imitable, track record of innovation. Even though most players in the services strive to innovate, Khadim India has successful record and consumer-driven innovation. O, organization, wide geographic presence. Khadim India has extensive dealer network and associate network that not only helps in delivering efficient services to the customers but also helps in managing competitive challenges in retail industry.
Clark's Potter 5 Force model. Fourth, threat of new entrants. By innovating new products and services, new products not only bring new customers to the fold, but also give old customers a reason to buy Kimberly's Clark's Corporation's product. By building economies of scale so that it can lower the fixed cost per unit. Second, bargaining power of supplies by building efficient supply chain with multiple suppliers. By experimenting with product design using different materials so that if the prices go up for one raw material, then company can shift to another. Bargaining power of buyers. By building a large base of customers, this will be helpful in two ways. It will reduce the bargaining power of buyers, plus, it will provide an opportunity to the firm to streamline its sales and production process. Threats of substitute. By being service oriented rather than just product oriented, by understanding the core need of customer rather than what customer is buying, is what Clark thinks of. Rivalry among the existing competitors. By building a sustainable differentiation, by building scale so that that it can compete better.
Khadim's FIFO analysis. Bargaining power of buyers of Khadim's India and service sector. If the buyers have strong bargaining power, then the usual tend to drive for price down, thus limiting the potential of the Khadim's India to earn sustainable profits. Rivalry among existing players in retail apparel industry. If competition is intense, then it becomes difficult for the existing players such as Khadim's India to earn sustainable profits. Third point, threat of substitute products and service in retail sector. If the threat of the substitute is high, then Khadim's India has to either continuously invest into R&D or it risks losing out to disruptors in the industry. Fourth point, bargaining power of suppliers in retail. If suppliers have strong bargaining power, then they will extract higher price from the Khadim India. It will impact the potential of Khadim India to maintain above average profits in retail industry. Fifth point, threat of new entrants in retail industry. If there is strong threat of new entrants in the retail industry, then current players will be willing to earn lower profits to reduce the threats from new players.